Good morning, everyone. I hope you're all doing well and had a lovely weekend. So a fresh week today, new week, new start, and of course, new or kind of increased volatility into the market. So during last night's Asian session open for the beginning of this week into month end, we have had significant volatility in the pound pairs. We only have to look at the downside progression in the pound against pretty much all its G7 counterparts, where we witnessed the flash crash in the pound this morning. So pound, broadly speaking, had at one stage overnight dropped from kind of 108, that really bearish close on Friday, back to as low as 103.50, 104. But we have seen a little bit of a bottom. We have seen a little bit of a reversal, and there is a lot of rumors circulating now of Bank of England intervention today to steady and stabilize these FX markets accordingly. So obviously the sell-off has been brought about kind of very bearish sentiment by larger investment firms and institutions in the wake of the mini budget last week, the end of last week, which saw a lot of confidence and I suppose clarity and certainty come away from the UK market, as institutions are really left puzzled by the very, very dovish sentiment by the Bank of England, while at the same time the increasing tax cuts by the UK Conservative government. So I suppose we just have to look at that collectively, the volatility in the pound. We talked about the volatility last week in the yen, and of course the intervention that the Bank of Japan had to do. Now, a lot of that intervention and initial move has eroded, and we're seeing a very, very similar move in the pound as well. So this morning we'll be looking at the yen as well. This week we'll be looking at the cable, we'll be looking at the pound pairs, and we'll be looking at continue to look at the dollar, because as we know, the dollar is the king at the moment, and of course how those movements are reflected, should I say, back into the stock market, as we saw another very, very bearish weekly close on Friday. So to take us into the chart this morning, we've got the yields and the dollar. Just starting off with the dollar, we had that massive impulse in the dollar pairs last week. Of course, what has happened, the dollar has still continued to remain very, very strong into last week's close. Now, albeit we are seeing a little bit of a corrective move this morning, but those corrective moves tend to be bought in again with equal ferociousness. So we did get to 1450, 114.50, should I say, on the DXY. We have come back to this 13 level. So again, the volatility in these markets are not just to the downside, they are in both directions. Every time we get a very, very sharp move to the upside, we tend to get an even sharper pullback of equal volatility and equal ferociousness as well. So it's important to be kind of aware of that. So on the, I suppose, the higher time frames, we're seeing the DXY still very, very much keep its bid, albeit there is a little bit of a wick coming through on the daily candle today. So that's very much worth keeping an eye on today, of course, to see is there any sort of deeper retracement, deeper kind of pullbacks after what was a very, very bullish week last week for the DXY. Same again with the 10-year yields. The 10-year yields has come up to short-term highs at around about 3.8%. But again, on the higher time frames, and this is obviously going to factor into those who trade gold, the volatility obviously very much continued to move to the upside, very gradual incline, and the markets are still turning to the upside. So 3.8% today is very much going to be the fulcrum to see how does the markets react off these levels, and more poignantly then setting up the tone for the week. So that then brings us into the FX markets. So we've got euro dollar here, we've got cable, and we've got dollar yen. So euro dollar last week, we talked about this 99 level off the back of the FOMC Fed meeting. Markets continued to decline last week, and of course that we got that really, really bearish close last week below the 96 print. So 97, 96 was kind of medium term levels that I've been looking for the last number of weeks, and we've kind of made that initial target. So I suppose now it's just following the order flow in terms of the price action, the battle between the buyers and the sellers visibly. Okay, now of course the fundamentals are moving markets at this moment in time, and we do obviously have to factor that into consideration as well, but at this moment in time markets are still very much creating that bearish order flow, risk aversion, and getting out of the riskier asset classes and making those kind of pullbacks, new lows, new highs, etc., and continuing with the trend. So the price action at the moment in time is still very much trending in that regard. So euro dollar is creating that little bit of a pullback, obviously with the back of this DXY pullback. So obviously the DXY move lower gives a little bit of upside movement to the euro dollar, and that's exactly what we're seeing. So these correlations within these markets are playing out accordingly as you would expect. So now it becomes a case of watching the retracement levels, watching to see if there's any sort of cyclical reversion, and then waiting to see if there's a clear rejection for that trend continuation structure. Same again with the cable. Okay, so the cable last week was steady, kind of around 112, 113, and then all of a sudden, as news emerged, as we saw with the mini budget, then of course we got that massive decline. And of course on the daily, very, very bearish decline on Friday of 108.50. We did open very weak this morning on obviously last night, and we've gone from that kind of 108 level with a little bit of a gap all the way down to kind of 104, with lows is kind of around 103.50 in the 103s. Now, of course, this morning, a little bit of a pullback. So markets are kind of getting back to where they open from, this kind of 108, 108.50 level. So I suppose it's just worth keeping an eye to see how does the price action reflect. Is this a dead cat bounce? Is this a short-term recovery? Or are we going to see that rumors become fact and truth regarding the Bank of England? Are we going to see that monetary intervention? If we do see that monetary intervention, that could stabilize the pound. So we do need to be kind of conscious of that as well in that regard. All right. So we've seen that kind of 350, 400 point down and up move at the minute. So I suppose 108, where we closed last week, is going to be very, very interesting to see. Do we actually bypass that, and do we see sort of a recovery, or does the markets ultimately unwind again? I suppose that's going to be the interesting element to factor into consideration over the next few hours or so into the US trading session this afternoon. Broadly as well, the yen, this is the yen last week with the monetary intervention. So we had the Bank of Japan getting involved. We made new structural lows. We flagged all the way back up into this region here. This region, this is the initial area I was looking at, kind of 143.50. We have broken and closed above it on Friday, and the markets are stabilizing. There is an order block area around 144.40-ish. So I suppose it's worth keeping an eye on that. But intervention at the minute, obviously it's caused a snap movement, and we've seen that kind of cyclical reversion. But we need to see, rather than just kind of a singular comment or maybe move, we need to see a replication of that. We need to see more from the Bank of Japan. Otherwise, the likelihood is this sell-off that we've seen in the yen against the dollar, so the dollar sell-off in USDJPY is probably only going to be brief. So we need to see if there's anything more conclusive. We do know 144, 145 is the area that the BOJ is watching and is kind of tracking very, very closely, and they actually did say that a number of times last week. So I suppose this area is going to be worth keeping an eye to see if there's any intervention, because if we do get intervention, we're going to see a replica of this type of sell-off here, where it's going to be very, very quick, very, very fierce, and very, very aggressive as well. So we just need to be aware of that also. And then, of course, that takes us into the other markets. So we're moving now from the yields and, of course, the FX markets now into the commodities. So obviously with the 10-year moving higher, that has meant that the gold prices has continued to move lower. We talked about it last week, the negative or inverted correlation between bullish treasury yields and, of course, the gold prices. They tend to move in the opposite directions. And, of course, we're seeing that continue to play out. So obviously, gold has made this short-term bottom. Of course, with the weaker dollar this morning, we are getting a little bit of a pullback or a little bit of an upside move. But, of course, very, very bearish overall. Now, this was the previous consolidation over the last kind of 2 weeks or so before we broke out of that kind of consolidation range here. So my perspective is I'm just watching to see if there's any sort of mitigation pullback into these zones. And, of course, watching to see kind of the price action. We're seeing the sentiment change session to session. And as traders, as short-term traders, as day traders, we need to be aware of that, and we need to be nimble enough to be able to react to that as well. All right. Then, of course, with the yen, moving from gold to the indices, should I say, we're seeing a little bit of a bottom coming through. So last week we talked about this 37.50 level. Of course, watching to see, does this hold up? Last week we confirmed that it didn't, and we saw that continuation on Friday to the downside. Now, of course, on Friday, what has happened? Continuated sell-off to the downside, but the markets are holding the June lows at the moment. So on the S&Ps, if we go to the higher time frames as well, on the NASDAQ, the markets are holding the June lows. Now, of course, the Dow Jones is slightly different to that, because, of course, if you look at the Dow Jones in comparison, we have engulfed the June lows. So it's not to say that the NASDAQ and the S&P won't follow suit. In comparison to the Dow Jones, The S&P and the NASDAQ is doing a little bit better because they are currently sitting at those June lows, particularly on the higher time frame. So 3650, 3670 is the range in the S&Ps on the higher time frames. We're seeing that retest of those June lows. Of course, waiting to see, is there a follow-on? Is there a deeper sell-off given the order flow that we've seen, particularly in the last week or so? And of course, into month end, September's volatility has been absolutely incredible, again, in both directions. So at this moment in time, then we are seeing obviously markets react off these lows, and I suppose that's going to be the consensus to see how does the consolidation develop. Do we get a little bit of a brief pullback all the way back up to this 3750, or are we going to see a continuation in the selling onslaught that's witnessed last week, and for these markets to continue moving lower? And of course, the S&P obviously brings us to the NASDAQ, and we're seeing the exact same thing happen here as well. So June lows over here, way over here visibly, we can see obviously the market's holding relatively firm, and of course we're seeing a continuation here at this 11,200 level as markets continue to remain very, very choppy at these local lows. Now we have broken through this 11.5 area. The order flow did pause initially, and we have seen the market sell off. So we've broken from 11.5 all the way back down to 11.2, and we are creating a short-term bottom. But like similar to the S&Ps, if we're not creating that upside pullback to these levels that we kind of came from last week, then the likelihood is we're going to be met with more selling in the early parts of this week, given that the markets at this moment in time is obviously still very much leaning to the downside. So of course, looking at the Dow Jones did break through the June lows, but when we talked about it last week, we did mention this area over here around 29,500, which is the COVID lows from the just before we had that COVID crash in 2020, the pre-COVID lows at 29,500. The markets have broken to new lows, but they are holding at this region, and a lot of analysts and a lot of forecasts and economists are evaluating this area very, very closely, because if this area breaks at 29.5 and we do get that clear breakthrough, there is a lot more downside to potentially come. We could see another 5-10% come off these indices, and more specifically the Dow Jones as well. So we're looking to see, does the bearish negative tones continue? At this moment in time, we're still very much tilted to the downside on fragile foundations. And of course, not to leave out the UK, we are seeing the UK markets again struggle. We talked about this area here, 71, 75, 72 last week. It has come all the way down to 7,000. We did get a brief run up of 7,000 on Friday, but of course, with the fundamentals that's happening in the UK at the minute, just being very, very cautious of how does these markets react at 7,000, because if this fundamentals remains bearish, we could very easily see this 7,000 area give way, and we could very easily see that continuation. And of course, then if the 7,000 is being taken out from a low perspective, we're then kind of undoing all of the price action that we've seen pretty much up until the early parts of March. And if we go back to the March price action, the lows have been coming in just above 67.50, which gives another 200 to 250 points of potential declines to the March lows. Now, from my perspective, just watching to see how does this react, because of course, if we look at the broader perspective, as we said, if 7,000 gives way, you've got a very, very quick impulsive area down here between kind of 6.8, 6.750 would be kind of the approximation that I would be looking at if this area gives way. So it's just all about watching the kind of the sentiment as well, particularly from a short term, because obviously you can very much use the short time frames into the higher time frames to kind of give yourself a better insight as well. It all depends really on the strategy that you're looking to implement. And of course, last but not least is the DAX. Okay, so the DAX in Europe, we talked about the 12.5 level last week. It's given way. It was the cycle lows, summer lows from July, but more poignantly, it was also the yearly lows as well that we kind of established in March. We tested it again in July, obviously held above it, and obviously last week we've broken through. So we are seeing a little bit of a bottom coming in around 12.1, 12.2. But we, I suppose, need to determine, are we going to get a pullback? Are we going to get a validationary reaction of this 12.5? At this moment in time, it's still a bit early to determine, but initial signs look to be quite positive. So from my perspective, it'll be worth kind of seeing, is the order flow going to continue? Is the bearish order flow going to continue? Lower lows, lower highs, lower lows, lower highs. And of course, if the markets are going to stabilize, of course, it's worth keeping an eye at this 12,500 level, because even on the 4-hour, there's a nice little order block area here between, I suppose, 12.5, 12.550. And of course, if I was to go down to the 1-hour channel or time frame, you would also see this area of interest here as well. So from my perspective, this is worth keeping an eye today to see if there is any sort of softer recovery into this region or not. And of course, the 1-hour, you can actually see it there as well. Just kind of doing a bit of looking, you can see that 12,515. So these are kind of this is the area broader range that I'm kind of looking at today to see if there is any sort of pullback into it, and of course if there's any sort of reaction as well. So other than that, I suppose it's kind of the calendar, I suppose broadly is still quite flat for the week, as we know. So we obviously kind of need to be conscious of that. If we look at our economic calendar just very, very quickly, we can see that there's not that much out today. There's a little bit of treasury auctions. There was a little bit, I suppose, low volatility news in Europe. We do have some auctions today. So in terms of treasury notes and treasury bill as well. So the bonds and stuff. So we just need to kind of keep an eye on the auctions today as well, because obviously that's going to factor back into Fed policy. And tomorrow, again, we have Schiller. So the Schiller index tomorrow is coming out. So that'll obviously be worth keeping an eye on. Home sales, home prices, the Richmond Fed index as well as out. So there's a few bits and pieces out tomorrow as well. But I suppose compared to last week, compared to the volatility of multiple central banks, multiple pieces of data, the data wise this week is going to be a little bit less in relevance. And of course, we're going to be looking at more monetary intervention by the likes of the BOJ and of course the Bank of England as well. So that's where we are at the minute, everyone. So hopefully that's okay. Of course, if you have any questions or you want to join our Discord community, you can feel free to do so. And of course, we will be on hand as well through the day, as well as news develops, and of course as the markets kind of update accordingly, and we get responses to these movements overnight this morning as well. All right, have a great week, everyone, and trade safe.